Welcome back to the Daily Crypto Deep Dive. Today's story isn't just about one token, it's about a turning point. A moment when a single court ruling could reshape not only the future of XRP, but the regulatory power of the SEC itself. This is the XRP domino effect. Today we will be asking the question: if Ripple wins, who falls next? Because whether you love XRP or you've written it off as a relic of 2017, this much is undeniable. It's still the only cryptocurrency to ever drag the US Securities and Exchange Commission into a courtroom and win major battles. And now, as the next stage of that legal war nears its conclusion, the implications stretch far beyond one company. We're talking exchanges, entire blockchains, and even the ETF race that could define the next bull cycle. Analysts from Kaiko, CoinShares, and Galaxy Research have been quietly crunching the numbers. They estimate that a clean regulatory path for XRP could inject between $35 and $50 billion of fresh liquidity into the broader altcoin market over a 6-month window. That's not hopium. That's institutional math. And it's exactly why Wall Street is suddenly paying attention to a token most of them used to laugh at. So let's break this down. We'll start with the story so far, then trace the dominoes waiting to fall, from Ethereum to Coinbase, and finish with the global picture and what analysts think comes next. If you're listening right now, do me a quick favor. Follow the podcast, drop a 5-star rating, and let's dive in. The battle between Ripple and the SEC began back in December 2020, when regulators accused Ripple Labs of conducting a multi-billion-dollar unregistered securities sale through XRP. To the SEC, XRP wasn't a currency or a commodity. It was an investment contract, plain and simple. But Ripple didn't fold. They argued XRP was a utility token, used for cross-border payments, not a speculative share in the company. And for the first time in SEC history, a crypto firm had the resources and the confidence to fight back. Fast forward 4 years, and much of the SEC's case has already collapsed. In July 2023, Judge Analisa Torres ruled that XRP sold on public exchanges did not constitute securities transactions, a landmark precedent that sent the token soaring 75% in 48 hours. But it didn't end there. The court battles shifted to what Ripple's institutional sales meant, how executives like Brad Garlinghouse and Chris Larsen handled disclosures, and, more recently, what penalties, if any, Ripple might face. Throughout it all, the crypto industry has treated this case like a proxy war. Because if Ripple beats the SEC outright, it sets a roadmap for every other project currently sitting in regulatory limbo. Since mid-2024, XRP's average daily trading volume has climbed from roughly $1.3 billion to nearly $2.1 billion, a 60% increase. Open interest in XRP futures is up 45% since June, and institutional wallets, defined by holdings over 10 million XRP, have grown by 18% quarter over quarter. In other words, the smart money is quietly positioning. The question is, what's the first domino? And the answer is, the SEC itself. If Ripple secures a decisive win, the Commission's credibility takes a direct hit. For years, the agency has relied on enforcement rather than clarity, targeting companies first and offering guidance later. A Ripple victory would flip that logic on its head. Analysts at Bernstein argue that a definitive loss would effectively force the SEC into a disclosure-first regime, removing its ability to regulate by intimidation. The second domino could be Ethereum, the elephant in the room. Back in 2018, a senior SEC official named William Hinman declared that Ethereum wasn't a security because it was sufficiently decentralized. That speech has haunted regulators ever since. Ripple's legal team used it to highlight the hypocrisy in how the SEC treats similar assets differently. If XRP isn't a security, how can Ethereum be? If Ethereum isn't, why target XRP in the first place? Galaxy Digital's Mike Novogratz recently told Bloomberg that if Ripple wins cleanly, the Ethereum free pass narrative dies. Translation: it reopens the question of how any blockchain token should be classified, and may push Congress to finally pass comprehensive digital asset legislation instead of letting the SEC improvise policy one lawsuit at a time. The next domino is global adoption. Ripple's on-demand liquidity network, which uses XRP to settle cross-border payments in seconds, already processes billions across corridors in Asia, Latin America, and the Middle East. In 2025 alone, transaction volume through ODL has risen 46% year-to-date. Banks in Japan, Brazil, and the UAE have all expanded pilot programs using RippleNet. If the US officially clears XRP, those same banks can scale globally without fear of sanctions or compliance risk. According to a recent Standard Chartered digital asset report, a full regulatory win could lift XRP's price to between $3.80 and $5 over a 12-month horizon, levels unseen since the 2017 mania. That's the bullish camp's thesis. Clarity equals capital. But every bull market needs its skeptics. Bernstein analysts warn that a total victory could trigger a buy the rumor, sell the news event, similar to what happened when Bitcoin ETFs launched earlier this year. They note that open interest and funding rates have become overheated, suggesting short-term traders are front-running the verdict. Still, the longer-term picture looks healthy. Ripple's balance sheet remains robust, boasting over $27 billion in XRP reserves and nearly $1 billion in cash equivalents. Even if penalties arrive, the company has the capital to absorb them and continue expanding. Meanwhile, XRP's correlation with Bitcoin has dropped to its lowest level in 2 years, now sitting at just 0.43 according to Kaiko data. That means XRP is starting to trade on its own fundamentals again, rather than just following the broader market. For seasoned traders, that's a sign of maturity, and a reminder that true price discovery only happens once the legal fog lifts. Outside the US, the dominoes are already toppling in Ripple's favor. Europe's MiCA framework goes live next spring, giving companies a clear set of rules for digital asset issuance and trading. Ripple executives have been quietly lobbying regulators in Brussels and London to ensure XRP qualifies as a compliant settlement token under MiCA. In Asia, the Monetary Authority of Singapore granted Ripple an in-principle license to operate as a major payments institution, joining Dubai's VARA approval earlier this year. Together, those jurisdictions represent nearly 40% of global remittance flows. According to a June report from Masari, Ripple's non-US transaction volume now exceeds its US activity by a factor of 3.7, with the fastest growth in corridors linking Southeast Asia and the Gulf. In other words, even if America drags its heels, the rest of the world isn't waiting. And that's what gives XRP its resilience. So what happens next? Most analysts expect a final ruling in the first quarter of 2026, though settlement talks could resume earlier if political winds shift. President Trump's appointment of Mike Selig, a known crypto advocate, as CFTC chair, adds a fascinating wrinkle. Selig previously argued that XRP functions as a commodity when used for payments and a security only in specific contexts, echoing Ripple's core defense. If that view gains institutional traction, it could accelerate a jurisdictional reshuffle between the SEC and CFTC, effectively ending the gray zone that has stalled innovation for nearly a decade. Goldman Sachs's digital asset desk estimates that regulatory normalization could unlock $250 billion in sidelined capital from US funds currently restricted from touching crypto assets. Even a fraction of that flowing into XRP would rewrite its market dynamics overnight. Now, let's zoom out to the human level, because behind all the charts, court filings, and analyst notes, this is really a story about belief. The XRP community has endured ridicule, delistings, and 3 years of legal fog, yet they've stayed relentless. You can mock them, but you can't ignore them. And the data proves it. Social media sentiment around XRP is up 70% month over month, while network activity on the XRP ledger just hit a 12-month high. That's not hype. That's momentum born from conviction. But conviction alone doesn't guarantee victory. Ripple still faces political risk. The SEC could appeal. Congress could delay digital asset bills well into 2026. And the macro environment, rising rates, global liquidity tightening, could weigh on every asset class, not just crypto. That's why seasoned investors like Pantera's Dan Moorhead advise treating XRP's legal clarity as a tailwind, not a trading signal. In other words, position wisely. Don't chase parabolic moves. Let's close with the big picture. If Ripple wins, the first domino to fall is the SEC's enforcement model. The second is Ethereum's untouchable status. The third is Coinbase's cautious listing strategy. And the fourth, perhaps the most important, is global financial perception. Because once the world sees a blockchain company defeat the most powerful financial regulator on Earth, the psychological barrier breaks. Innovation doesn't ask for permission anymore. It demands participation. History shows this pattern clearly. When PayPal settled its case with US regulators in 2002, it didn't collapse. It went public 6 months later and changed online payments forever. When the 2013 BitLicense crackdown hit New York, exchanges fled temporarily, then returned stronger once compliance frameworks matured. Each cycle ends the same way. Regulation forces adaptation, and adaptation triggers the next wave of growth. So maybe, just maybe, this Ripple case isn't about winning or losing. It's about clarity, the most valuable commodity in crypto. And once the market gets that clarity, the dominoes won't just fall. They'll reset the entire board. Drop your thoughts in the comments, smash that follow button, leave a 5-star rating, and as always, we'll see you at the top.